problem number 4 on calculation of various ratios relating to balance sheet and profit and loss account. Here, first of all, we read the problem carefully and then we solve the problems, okay, or we calculate ratios. Here, following are the financial statement of Yes Limited for the year 2020. Balance sheet as on 31st March 2020. Liability rupees, assets rupees. Here first of all I read the liability side. Owner's equity 7% preference share capital rupees 2 lakh. Equity share capital rupees 8 lakh. General reserve rupees 9 lakh. Retained earnings rupees 25,000. Total owner's equity is equal to or is rupees 19 lakh 25,000. Debt equity 6% debentures rupees 1 lakh. Loan long term 80,000. 8% bond 20,000. Total debt equity is rupees 2 lakh. Current liabilities of the Yes Limited is creditors rupees 60,000, bills payable rupees 20,000, bank overdraft rupees 20,000, outstanding expenses rupees 20,000, proposed dividend rupees 50,000. Total current liability is rupees 1,70,000 and total of liability side is 22,95,000. Now we are read the asset sides of the balance sheet. Here fixed assets, building rupees 6 lakh, plant and machinery rupees 4 lakh, furniture rupees 2 lakh, patent rupees 50,000. Total fixed assets is rupees 12 lakh 50,000. Current assets of Yes Limited is cash rupees 2 lakh 20,000, bank rupees 1 lakh 30,000, investment in government securities rupees 1 lakh 80,000, sundry debtors 1 lakh 15,000, bills receivable 80,000, stock 3 lakh, prepaid expenses rupees 20,000 and total current asset is rupees 10 lakh 45,000 and total of asset side is 22 lakh 95,000. Here profit and loss account for the year ended 31st March 2020 is also given. Sales rupees 24 lakh, cost of goods sold less cost of goods sold 16 lakh. We get a gross profit rupees 8 lakh minus expenses rupees 7 lakh. We get a net profit of rupees 1 lakh. So here sales is given, cost of goods sold is given, gross profit is given, operating expenses is given and net profit is also given in the problem. You are required to compute the following ratios. First, current ratio. Second, acid test ratio. Third, gross profit ratio. Fourth, return on proprietors fund. Debt to equity ratio. 6, fixed assets to net tangible or net worth ratio. 7, current assets to proprietors fund ratio. 8, net profit ratio. 9, total assets turnover ratio. 10th, operating ratio. 11, return on capital employed and 12, fixed asset turnover ratio. So in our today's lecture we calculate these 12 ratios and all information is given in the problem. Just put the figures in the formula. We get a ratio of the problem. Okay, so here first of all we solve a current ratio, and here solution. In the books of Yes Limited Ltd for the year ending 31st March 2019, 31st March 2020. Okay, so 31st March 2020, 2020. Here first ratio is current ratio is equal to what the formula of current ratio? The formula is current assets divided by current liability. Okay, so here write the formula and then put the figures which is given in the problem. So current assets divided by current liability. Okay, so put the figures in the formula. So here current assets is also given in the problem and current liability is also given in the problem. So find out the figures of current assets. So here these are the current assets of the Yes Limited. Okay, so here we highlight it as yellow color. So total of current asset is 10,45,000. Okay, so here we get a total of current assets, that is 10,45,000. Okay, so put this figure in the formula. We get a 10,45,000 is the amount of current assets divided by current liability. So current liability is also given in the problem. So find out the figures or amount of current liability. Here liability side, current liability is also given in the problem. So current liability is creditor, bills payable, bank overdraft, outstanding expenses, proposed dividend, that is 1,70,000 is current liability of the organization. So put this figure in the formula. 1,70,000, we get a current ratio that is equal to 6:15:1. Okay, here 1 is a standard. Okay, so if we have one current liability, so we paid this one current liability by this ratio. It means it indicates the uh, working capital ratio. Okay, so we easily paid off this liability. It means one current liability and six current assets. Okay, so here we get the current ratio of the organization. Now we find out the acid test ratio. Okay, so here we solve or we calculate the current ratio. Okay, now we are going to solve the second ratio, that is acid test ratio. Okay, so here second ratio is acid test ratio. Okay, so acid test ratio is equal to what the formula of acid test ratio. So we discuss in our previous lecture the liquid assets divided by liquid liability divided by liquid liability. Okay, so here we put the figure or we find out the liquid assets and liquid liability of the organization. So here liquid assets is equal to current assets less stock less prepaid expenses. Okay, so put the figures in the formula. So we get the liquid assets of the organization. So here we know the current assets or total of current asset is equal to, so here total of current asset is equal to 10,45,000 less or minus stock. The amount of stock is given in the problem. So here the amount of stock is 3 lakh. Okay, the amount of stock is 3 lakh. So deduct this 3 lakh from current assets. So 3 lakh less prepaid expenses. So prepaid expenses is also given in the problem. So here 20,000 is prepaid expenses. So deduct these prepaid expenses from current assets, 20,000. Okay, so liquid asset is equal to liquid asset is equal to 7,25,000. Okay, 7,45,000 minus 20,000 is 25,000. Okay, so 7,50,000. So sorry, 7,25,000 is our current liquid liability. Now we are find the liquid assets. This is the amount of liquid assets. Okay, we find out the amount of liquid assets. Okay, here current assets minus stock minus prepaid expenses, we get a liquid asset. Now we are find the liquid liability. Okay, so liquid liability is equal to current liability minus bank overdraft minus outstanding expenses. Okay, so here everything is given in the problem. So current liability, we know the total of current liability, that is current liability is 1,70,000 here. Okay, 1,70,000 minus 1,70,000 minus 1,70,000 minus bank overdraft. So here 20,000 is bank overdraft. So okay, here bank overdraft is given in the problem. Okay, 20,000. These 20,000 are deducted from 1,70,000 less outstanding expenses. So here outstanding expenses is also given in the problem. Outstanding expenses 20,000. Okay, so we make it red to better understanding. Here we deduct these 20,000 from current liability. Okay, so here we get a liquid liability is equal to 1,30,000, 1,20 plus 2040. Okay, so put these figures in the formula. So here sorry, 1 lakh 7,25,000 divided by 1,30,000. Okay, 1,30,000 we get a acid test ratio is equal to, so here 7,25,000 divided by 1,30,000, that is 5.57. okay, 5.57 as to 1 approximately. So here we find out the acid test ratio and it is 5.57. okay, so here we find out the liquid liability, okay, and liquid assets. Very easy to find out, just remember this formula. Okay, now we calculate the third ratio, that is gross profit ratio. So here gross profit ratio is very easy. Okay, gross profit ratio is very easy to calculate. So here gross profit ratio is equal to GP, means gross profit divided by sales. Okay, gross profit divided by sales into 100. okay, gross profit divided by sales into 100. So in our problem, gross profit is also given here. Okay, gross profit is also given here. 8 lakh is the gross profit of the Yes Limited. Okay, so put this amount in formula is equal to, okay, 8 lakh 8 lakh divided by 8 lakh divided by sales is also given in the problem. Okay, here sales is 24 lakh. Okay, sales is given in the problem, rupees 24 lakh. Okay, so put these sales in the formula, that is 24 lakh. Okay, so here 24 lakh. Okay, so ratio is equal to, or GP, gross profit percentage, is equal to 33.33%. Okay, use a calculator to find out the ratio. We easily get a percentage of gross profit ratio. Now we calculate the another ratio. Here we calculate three ratio, that is gross profit ratio and acid test ratio and current ratio. Now we are going to calculate the return on proprietors fund. Okay, so here return on proprietors fund, fourth ratio, is calculated here. So here it is very easy to calculate proprietors fund. So return on proprietors fund means the amount which is returned to the proprietor from business. Okay, so here 4 is equal to, okay, so return is related to the business net profit. Okay, so when the business earned a maximum profit, it is beneficial to proprietors. Okay, so return on proprietors capital. Okay, so here relationship between net profit and capital of the proprietor. Okay, so net profit divided by proprietor's capital, and we know the amount of capital. Okay, into 100. Here we know the percentage of return on capital, so here multiplied by 100. Okay, this is the formula to find out the return on proprietors fund. So put the figures in the formula here. Everything is given in the problem. So here first of all find out the capital of the proprietor. So here 19,25,000 is owner's equity or owner's capital. Okay, here all these are the proprietors fund. Okay, 19,25,000. Okay, and net profit is also given in the problem here. Okay, net profit is rupees 1 lakh. So put these figures in the formula, we get the return on proprietors fund. How much percentage are returned to the proprietors of the business. Okay, so here net profit is equal to 1 lakh. Okay, 1 lakh divided by capital. Okay, so capital is 19 lakh 25,000. Okay, so here 19 lakh 25,000 multiplied by 100. So we get the percentage of return on capital employed is equal to 5.20%. Okay, so here the return on proprietors fund is 5.20%. So very easy, just remember the formula. Proprietors fund, return on proprietors fund, to make a relationship, to find a relationship. So here net profit divided by capital into 100. Okay, invested capital invested in the business, so we get the percentage of return on owner's capital here. Okay, so here fifth, now we find out the fifth ratio. Return on proprietors fund, here we solve the fourth ratio, return on proprietors fund. Now we are solve the debt to equity ratio. Okay, debt to equity ratio, here in our problem debt equity is also given. So debt to equity means to find out the ratio of debt or utilization of debt. So here debt to equity ratio is equal to debt to equity ratio is equal to net Q or total debts. Okay, here total debts divided by total debts divided by total debts divided by net worth. Okay, net worth or capital. Okay, net net worth or capital, so multiplied by 100. Okay, multiplied by 100, we get a debt to equity ratio or percentage of debt to equity ratio. Okay, here in our previous lecture we understand the meaning of debt to equity ratio. So here just only put the figures in the formula, we get the debt to equity ratio. So utilization of capital and utilization of debt in the business. So here debt to equity is given here. So here total debt is equal to 2 lakh plus 1,70,000. Here total debt is equal to debt 6% debentures, loans, long-term bonds. Okay, here we get a debt, and total debt is total of these two. Okay, total debt is 1,70,000 plus 2 lakhs. So here we find the total debt. Total debts is equal to debt equity plus current current liability. Okay, so here debt equity is equal to 2 lakh plus 2 lakh plus 1 lakh 70,000. We get a total debt. Okay, so total debt is equal to 3 lakh, sorry, total debt is equal to 3 lakh 70,000. Okay, so put this figure in the formula. Here we get a total debt, and net worth or capital is also given in the problem, that is 19 lakh 50,000. So here 3 lakh 70,000 divided by 19 lakh 25,000 multiplied by 100, we get a percentage of debt to equity ratio, and that is 19.22%. Sorry. Okay, so here we find out the debt to equity ratio. Okay, now we are solve a sixth ratio, that is fixed assets to net tangible or net worth ratio. So here we calculate this. So here the formula of calculating the fixed assets to net tangible or net worth ratio is equal to fixed assets divided by proprietors fund or net worth, okay, or capital. Here fixed assets to net tangible, fixed assets divided by proprietors fund or net worth into 100. Okay, here we calculate the percentage of fixed assets with the percentage of, or with the amount of capital of owner multiplied by 100. Okay, so here fixed assets or amount of fixed assets is given in the problem, so put this amount in the formula. So here in balance sheet the fixed assets or total fixed assets is given here. Okay, fixed assets is 12 lakh 50,000. Okay, 12 lakh 50,000. Okay, 12 lakh 50,000. So put this amount in the formula. Here 12 lakh 50,000 divided by proprietors fund, that is 19 lakh 25,000. Okay, multiplied by 100. Okay, multiplied by 100. Okay, then we get is equal to the percentage of fixed assets to net tangible worth or proprietors fund is equal to 64.90%. 64.90%. Okay, so here we get a fixed assets to net tangible or net worth ratio. Now we are calculate the seventh ratio of our problem. Here the seventh ratio is current assets to net worth. So formula is same, only take a total of current assets. Fixed assets should not be taken into consideration. So only change is here. Okay, fixed assets, here we make a changes. Fixed assets is erased and make a current assets or get a total of current assets. So here formula for calculating which ratio, so current assets to proprietor fund ratio or proprietor fund ratio is equal to, formula is same, there is no any change, just make change in fixed assets. Here we know very well the relationship between current assets to proprietors fund. Here relationship between fixed assets and proprietors fund or net worth. Okay, also called capital. Net worth is also called capital. Okay, so here we put the figures. So first of all find the total of current assets. So total of current assets is 10,45,000 here. Okay, 10,45,000 is the total of current assets. So put this value in the formula. 10,45,000 divided by proprietors fund. Okay, so here proprietors fund, sorry we did not write a formula. First of all write the formula. So here here current assets divided by capital or proprietors fund multiplied by 100. Okay, so put the figures in the formula. So here we find out the current assets or total current assets. So here total current assets is equal to 10,45,000 divided by proprietors fund 19,25,000. Okay, multiplied by 100. Okay, so answer is the percentage of current assets to proprietary fund ratio is equal to 54.30%. Okay, is the ratio of current assets to proprietors fund. Okay, so here we get a answer. Now we solve a ratio number 8. ratio number 8, that is net profit ratio. So net profit ratio is very easy. Net profit ratio is equal to net profit divided by sales. Net profit divided by net profit divided by sales into 100. So here net profit is also given in the problem and sales is also given in the problem. Here net profit is 1 lakh. So here in problem, see the net profit. Sorry. Here, okay, net profit is equal to 1 lakh given in the problem. So put this amount of net profit in the formula, and sales is also given in the problem, that is 24 lakh. Okay, so here 1 lakh divided by 24 lakh multiplied by 100, we get a net profit or percentage of net profit. So here 1 lakh divided by 24,000, sorry, 24 lakh, not thousand, 24 lakh multiplied by 100, we get a percentage of net profit ratio, and that is 4.16%. okay, 4.16% is the net profit ratio. Now we calculate the ninth ratio, and is known as total asset turnover ratio. So here ninth, total assets turnover ratio. So how to make the formula? So find the relationship. So here total assets means all assets, fixed assets plus current assets, and here turnover means sales. Okay, turnover means sales of the organization. So here relationship between total assets and total assets and turnover ratio. So we find out the relation, and according to that relation we make the formula, that is total assets divided by turnover or divided by sales. Okay, total assets divided by sales, net sales. Okay, net sales. Okay, here not multiplied. We find out the utilization of net total assets for our turnover. Okay, so how much time we use the assets? So here we don't multiply it by 100. Okay, so we always find this ratio in times. Okay, so here find out the total assets of the organization. So is equal to total assets is given in the problem. So how we find out the total assets? Here we write out the some working note. Total assets is equal to fixed assets plus current assets. Okay, fixed assets plus current assets. So put the figures in the formula, that is equal to fixed assets is 12,50,000 and 10,45,000. Okay, 12 lakh 50, 10 lakh 45. So here 10 lakh, sorry, 12 lakh 50,000 plus 10 lakh 45,000 is equal to 22 lakh 95,000. Okay, so here formula is wrong. So here we find a relationship, and according to this we make a formula. So turnover means sales. So sales is always in upper side of the formula. So here divided by, sorry, total assets, and here is the sales. We find the relationship between sales and total assets. So sales, net sales or sales. So we easily find out the relationship between uh, total assets and turnover. Okay, so here the formula is total asset to turnover ratio means sales divided by total assets. Okay, so first of all we write the wrong formula. Now we correct the formula. Okay, so here relationship between sales to relationship between sales to fixed assets. So sales to fixed assets or total assets. Okay, so put the figures in the formula. That is 24 lakh divided by total assets is equal to 22 lakh 95,000. Okay, is equal to how much time? 4 point, sorry, 1.04 times. Okay, so utilization of fixed assets to turnover. 10th formula or 10th ratio, that is operating ratio. So operating ratio is equal to cost of goods sold. Okay, CGS plus non-operating expenses. Okay, cost of goods sold plus operating, not non-operating, sir, what do you say, operating expenses. Okay, in last lecture we solved this problem or solve this ratio. So remember these formulas for calculation of operating ratio. So here divided by sales. Okay, sales multiplied by 100. Okay, so here put the figures in the formula. So is equal to cost of goods sold is also given in the problem. Okay, here cost of goods sold, that is 16 lakh, 16 lakh. Here 16 lakh is given and expenses is 7 lakh. Okay, so 16 plus 7 is equal to 23 lakh. Okay, 23 lakh is the amount of cost of goods sold plus operating expenses. So here just put the figures. Okay, 16 lakh plus expenses 7 lakh divided by sales is equal to 24 lakh. Okay, so 24 lakh multiplied by 100. So here multiplied by 100 is equal to 23 lakh divided by 24 lakh divided by 24 lakh 24 lakh into 100 into 100, we get a percentage of operating ratio, that is 95.80%. Okay, very easy to find out this ratio. Okay, now we are find out the second last ratio of this problem, that is return on capital employed. Okay, return on capital employed. So formula is same as return on proprietors fund. Okay, formula is same as return on proprietors fund. Okay, 11. Okay, so here is equal to net profit divided by capital employed. How we find out the capital employed or total assets? It means the capital is invested in assets or total of all assets here divided by capital employed. So net profit divided by capital employed. So investment of owner's capital in which form? So here capital employed is the investment of capital in fixed assets and current assets. So here capital employed is equal to total assets of the Yes Limited. Okay, Ltd. So total assets multiplied by 100, percentage of, okay, we calculate the percentage of return on capital employed. So here multiplied by 100. Here net profit is given capital employed, we find out the capital employed. So total assets is equal to fixed assets plus current assets is equal to 12,50,000 plus 10,45,000 is equal to 22,95,000. Okay, is the capital employed or total capital employed. So put the amounts in the formula, that is net profit is equal to 1 lakh divided by divided by 22 lakh 95,000, 22 lakh 95,000, okay, multiplied by 100. So it's equal to the percentage of return on capital employed is equal to 4.36%. 36%. So here okay, so return on capital employed is 4.36. Now we solve the last ratio of our problem, that is 12 ratio, and it is known as fixed asset turnover ratio. So here we calculate the total asset to turnover ratio. Now we find out the fixed assets to turnover ratio. So here formula is same, okay, sales divided by, we take a total assets, now only consider a fixed assets, okay. So here sales divided by fixed assets, sales divided by fixed assets, okay. We find out the how many time we use the fixed assets. So here fixed assets, okay, so is equal to 24 lakh divided by 12,50,000 is the total of fixed assets, okay. So we get a fixed asset to turnover ratio is 2 times, okay. So here we calculate all the ratio in